how much of the market's next move is centered around a considerable cut from the Fed? Let's ask Ed Yardeni. He is the president of Yardeni Research, with me here at Post 9. Welcome back.
Thank you very much.
Is that what this really is about, you think? Like 50 basis points is now what the market thinks is going to happen?
I think it's partly that, but I think what the market knows for sure is that earnings were much better than expected in the first quarter and in the second quarter, despite all the turmoil we had in Washington policymaking. So I think what the market really is counting on is that earnings will continue to make new highs. The reason the market's at a new high is because earnings are at a new high. The valuation multiple is elevated, but it's kind of stuck around 22, which is fine with me.
But this really feels like is a rate cut rally at this point.
I mean that's partly because of the 25 basis points, and I think that the Fed doesn't have to go 50 because the market's already easing financial conditions by having this kind of rally. And if they get disappointed, but the Fed communicates that there's another quarter point coming, I think the market will be fine with that.
You raised your S&P target, in fact, from 6,600 to 68.
Yeah.
So if they surprise you and they do go 50, does that make you reconsider that number?
Oh, yeah, I'll go to 7,000.
You will?
Yeah.
Next week?
Yeah.
Wow.
It's a bull market. The only question is, how bullish do you really want to be? I see a potential for a melt-up, and a melt-up would be that the PE, which is a 22, goes to 25, and that would be awfully reminiscent of what happened in 1999.
Well, I mean, some say we've already had that melt-up in those kind of stocks. What would you say to that?
Well, I would say that those kind of stocks, you're referring to the information technology stocks.
The same ones you're referring to when you talk about 99.
Yeah, absolutely. And in those cases, a lot of them didn't have earnings, or the earnings turned out to be very disappointing. That's not the case with the technology stocks so far. If you look at technology and communication services, they account now for a whopping 40% of the S&P 500 market capitalization, and they count for like 20%, 28% of earnings, which is why the Magnificent Seven are selling at 30, 31 times forward earnings.
What about the rest of the market? That's what everybody wants to know.
Well,
it feels like the mega caps are the easy one to game out, but what about everything else?
Well, I call them the impressive 493.
Impressive.
I think they're going to be increasingly impressive. And they had good earnings. It wasn't just a Magnificent Seven earnings surprise. It was also lots of other companies. Like the Magnificent Seven are putting together all these technologies that they have to sell to somebody to improve their productivity, and that's the impressive 493.
You can get to 6,800 and 7,000 perhaps with those. Like, do you need the rest of the market to get to that? The way that the market is obviously...
I don't need it, but I think it's going to happen. I think it is happening. You mentioned before how broad it is today, and I think, now that the Fed is signaling that they're ready to cut rates, they're going to cut rates, and they might cut rates some more after this next meeting. I think you're going to get a pretty traditional broadening out of the market.
What do you think about the small caps, for example?
Well, I keep watching their earnings numbers, and they've been flatlining since 2022, but I'm seeing a little bit of signs of life when I look at analyst consensus expectations. So I think they're going to perform fine.
Would you buy them here? I mean, that doesn't sound that bullish, like you normally are about other parts of the market.
I'm still a large cap kind of guy, I still think the large caps are going to be where the action is, but on a short-term trading basis, a lot of investors are going to view them as relatively cheap, and there's a potential for the earnings to get better now if the Fed's going to, in fact, be cutting rates more than one time.
What do you think upsets your story? Like if you say 6,800 seems reasonable now, perhaps even 7, what gets in the way of that?
Well, everybody asks me about the Supreme Court overturning Trump's tariffs. What that would do, and I don't know. I mean, it could be pretty confusing. But I think the market's kind of signaled that they're done with that issue, that they're moving on and thinking about how well the economy has done despite all that.
Well, that'd be a big deal, though, right?
Yeah.
I mean, if you have to give a bunch of refunds and you start projecting different numbers on the deficit, bond market, the bond market better than most. The bond market's not going to sit there and take that news well.
I think, anything that kind of brings back the deficit crisis scare. Right now we have a deficit crisis in France, UK, Japan, and we've actually benefited from that. Our bond yields have actually gone down while their bond yields have actually gone up. If we bring back a debt crisis scare, and part of that could be that the government has to refund $500 billion to $1 trillion, that would be unsettling, and that could put the kibosh on a year-end rally. Maybe we're having our year-end rally now, and we'll pay the price for it later.
Yeah, we like to pull